Hi, and thanks for stopping by. I'm Larry Weinstein, and I'm both a CPA and the founder of SolveMyTaxProblems.com, based in Houston, Texas. And today, I wanted to answer the question, what are some of the reasons that I do not get a solution when I have a CDP hearing? The reason for that I can come up with are numerous, but we'll talk about 3 of them today. When you have your CDP hearing with an appeals officer, basically, they are looking to come up with some type of resolution for you. They're not going to propose a resolution. You have to propose a resolution to them, a solution. Some of the solutions could be an offer in compromise, currently not collectible. You might apply for an offer in compromise or an installment agreement. I think I said that. So some of the reasons that you won't get a solution from the appeals officer at your CDP hearing are: 1, you haven't filled out the correct paperwork. You might have filled out the paperwork and you might have filled it out incorrectly. You might have filled out the paperwork correctly, but you don't have all of the necessary supporting documentation. In other words, bank statements, pay stubs. It could be rent receipts or mortgage interest or health insurance receipts or utility receipts, home mortgage interest, whatever the required documentation is, you haven't provided it. It could be that the solution that you're proposing based upon your ability to pay is too low. The IRS thinks that you can afford to pay, for example, $1,500 a month, and you're proposing $100 or $500 a month. You're way off on what it is that you think that you can afford to pay versus what the IRS thinks that you can afford to pay. And then the last one I think I'll really talk about is if you are self-employed or you have significant income, investment income, rental income, that is otherwise not having any taxes withheld, you're required by law to make estimated tax payments. And the reason for that is simply when you get, for example, an installment agreement, you're agreeing to file and pay your taxes on a going forward basis. And the IRS wants to see estimated tax payments being made currently for future year's taxes, because if you file your tax return in the following year and you haven't paid enough taxes in, then by definition you're going to owe money on your tax return, and you're technically going to what's called default the installment agreement that we just established. So the IRS gets pretty picky about making estimated tax payments when it's known that you're self-employed or you've got significant other investment income or rental income, and that's going to keep you from not owing taxes in a future year. That's it for today's video, where I discussed why won't you be able to get a solution at a CDP hearing. I appreciate you stopping by. Look forward to talking to you real soon.